All right, so we got all the FOMC dates from December 14, 2022 to December 10th, 2025. I'll keep this on a different page and I'll go through them as we move forward. All right. So this is my FOMC strategy. It's the simpler strategy that I have in my playbook. I have about 4 strategies that I use on a day-to-day basis. This one is the 4th one. And what we'll cover in this video is going to be the entries and exits, what I'm looking for in the market, what I'm thinking about when I trade, what I'm waiting for, the strategy. So how I trade it, and the max number of losses. An important part of any strategy is how many losses do you take before you quit, and then risk management and a couple other things. So, and we're going to back test from December 22 to 25, so 3 years. I'll give you plenty of data to look at. All right, and our first day is December 14th, so we'll go to December 14th. This is December 13th. Okay. So December 14th is this. And we'll mark out 2 o'clock, and we'll mark out 2:30. And what I'm looking for initially is I'm not looking to take any trades between 2 o'clock and 2:30. I'm looking for the market to create a trend, create some side of the market, and I'm waiting for 2:30 to begin to look for entries. Right, so we're going to establish that the market is trending downward, which is easier on this day. It can be difficult. All right, and so the market's trending down. We got lower lows and lower highs, and we're just going to look for an entry here. Here is our first entry. All right. And I'm looking for strictly a 2-to-1 risk reward. And looking to play this. And this is a strategy that I use personally on my own trading accounts. And let's see where this goes. So we get stopped out here. So I'm looking for another entry, but this will be my last entry. So I'm looking for 2 entries max. 2 entries max. And we're looking for around a 10 to 11 point stop. At 2-to-1 risk reward. It can be higher. So if you wish to, oh, okay, yeah. So we get a couple losses off the bat, and I want to report. So there is something that I use called All right, so the running tally right now is going to be a 21. So I'm down 21 points. So we'll mark this. So minus 21. All right. And some mark here for the first date that we're looking at. Anyway. Yeah, tricky day. All right, let's move to the next one. Next one is February 1st, 2023. Okay, so this is a case of a more ambiguous day in the market. And according to me, though, because we print a higher high here, I would be taking longs. However, on ambiguous days, you can take shorts as well, and shorts do fulfill. So it is up to you. But for me personally, I take this candle as a reference point, and we're looking to see where this candle goes. And so this is all in the 1 minute charts. So we're looking for longs. So I'm just looking for a pullback. I'm looking for a couple green candles, a couple bullish candles, and looking to take longs here. So buy here. And looking for 2 to 1. And that fulfills quite easily. Now, if you wanted to, you could take 80% of your position off or 50% of your position off and allow this to run. I'm not doing this in this example in this set of in this back test, but it is something that you can because FOMC does run. So now our PD, our points delta equals 0 because I took 21 points of loss in my last day, and then we're taking 21 points of profit today. And we'll move on to the next case. Again, this is a more ambiguous case. However, if you consider the reference point being the first minute candle, the market does push down. And so personally, I would be taking shorts. So you can make those choices on your own determination, but I'll be taking shorts in this case. All right, let's look for a short here, and we get a short, which I'm looking for two bearish candles, to get me into a short. Always looking for around 10 to 1 and around a 2. Yeah. So looking for that. And if it doesn't work the first time, you can always try a second time, but no more than two trades. So let's see if this goes. So all right. And considering our loss here, plus our win, so we're looking at 10 points. So maybe 10 points this day. So our PD equals zero plus 10. All right, move on to the next one. The next one is going to be June 14th. All right. It's pretty obvious. Market is breaking down. So we'll be looking for shorts and really looking for two red candles, two bearish candles. And we get our two bearish candles here at 245. All right, looking for 10. Looking for 2 to 1 here. All right. And we lose. Let's see if there's another. We got another entry here. Sell. And I'm going to take off before 4 o'clock. So this is 4 o'clock here. So we might just take off here. I would probably take off around 340, 350, but it's getting a bit late. So we'll just take off here. And so this will be about a 10-point trade. And so 10-point trade minus the 10-point loss means we net nothing. So 10 plus 0 equals 10. All right. That's kind of how trading goes. So you don't always get bangers. Let's get the best possible trade set up, but you don't get too overexcited. All right, this is fairly easily achieved result. So we get a 20-point trade here. The market is bullish here. So let me mark that here, and our points delta is currently 10 plus 20 plus 30 points. So we made 30 points thus far. And the reason why I entered this trade, if we look in terms of reference, we have our reference candle here at 2 o'clock, and we move up whilst keeping maintaining higher lows here. So we're maintaining higher lows, we're printing higher highs. Therefore, I'm looking for longs. Fairly easy. Let's see how far this goes. Oh, wow. Doesn't go too much farther than that. So 2 to 1 is always good. I take 2 to 1s. However, some people will take 2 to 1s and then they'll take much of their position off. I usually at least 50% of your position off at 2 to 1, and then leave some runners but a break even stop. All right, we'll move on to number 6. Number 6 is going to be September 20th. Again, we're looking for the market to show its hand, essentially show its hand from 2 o'clock to 2:30, and we see that the market is going short, and we see that overall trend is we're printing lower lows and lower highs here. So we're looking for shorts, and we get a nice pullback, and we get short entry, which is essentially 2 successive red candles. And we'll go. And we get a hit here. So we'll say 20 points here. So our PD, or points delta, is going to equal 30 points from the last trades plus 20 equals 50. All right, and yeah, so you could again take profit here and then let the rest run with a break-even stop for an extra 10 points, an extra 15 points. It's up to you. Yeah. All right, so this market eventually goes, yeah, it's moving quite substantially. All right, we'll move forward. All right, our next November 1st and December 13th. Our next 2 FOMCs. Okay. 2023. All right, I scrolled a little bit farther past on this one, so we'll just do it in hindsight. So 2 o'clock and 2:30 is here. The market is selling off here. Well, from 2 to 2:30, I see the market printing a lower low and lower highs. So we get lower highs here and we get lower lows here. And when it prints the last candle before 2:30, the market's not sufficiently higher than this. So we're selling on this situation, and we're looking for 2 successive red candles. We get 2 successive red candles here. We're looking for 10 to 1 here. And we take a loss. We take a loss here. And then we get another opportunity to take a short here. And we take another loss here. So that's minus 20. So our PD equals $50 minus 20 equals 30. Then we'll move forward from here. All right, market's moving higher. Very obviously, we're looking for an opportunity to go long here. So we got an opportunity here. We'll take it. All right. So that's 20. Just say 20. PD equals 30. All right. Fairly self-explanatory. The market's moving higher. We're printing higher highs and higher lows. And I'm looking to take a trend trade to the upside, waiting for a pullback. But generally speaking, my entry model is 2 successive green candles, 2 successive bull candles. Because in the case this is blue, but yeah, so 2 successive bull candles. We get 2 successive bull candles here, and at 234, I take a trade to the upside. Looking for a standard 10-point stop loss, 20-point take profit. appears that we're moving lower. Looking to take shorts. This will be my first short entry, 2 successive red candles, 2 successive bear candles. Stopped out on trade number 1. And we have an opportunity to take a trade number 2. Which is moving smoothly. Let's see where it goes. All right. Okay. So here we had a stop on this. That went. So we're plus 10 points on the day. So our PD is currently 50 plus 10 equals 60. All right. What we did is we're just simply taking the same trade twice. So we take the same trade once, it doesn't work out, and we take the opportunity twice. This whole thing can be looked at as one pullback, and then we get two successive red candles and we take a short. Right. And our next day is March 20th, 24. Great opportunity to the downside here. All right, market's moving higher, printing higher highs and higher lows. Looking to take a long. The opportunity arises. All right. And the stops don't actually have to be 10 points. They're around 10 points. I use 10 points as a starter. And if the volatility in the market is substantial, I'll increase it to a maximum of 11. So 11 points is the maximum, but yeah, it's close. All right. Simple. 21 points. All right. Just count 20 here. Just make it easier for us to see the PD through over time. Anyway, 60 plus 20. Okay. And at this point in time, I'm going to increase size just a little bit. Just 3 to 4 contracts, not 1 to 2 contracts, or 2 to 3. 3 to 4 is a little bit less. Just an increase in 33%. All right, so the next day is next FOMC is May 1st, 2024. But this is a solid day. All right, again, market's bullish. Higher highs and higher lows. All right, looking for the first entry here. Looking for an entry here. All right, let's see where this goes. Difficult. All right, looking for another entry here. And we get filled. So that's 20 points at a 10-point loss. So our points delta equals 80 from the previous trades plus 10 equals 90. All right, moving along. Okay, May 1st. So our next trade is June 12th, 24. All right, this is a bit of an ambiguous day, so we'll have to carefully parse. So on the reference candle, the market's actually moving a little bit higher from it. So we've got higher highs printing. I mean, this one is all you need, but yeah, we got higher highs printing here as well. So the market's very slightly bullish. And on ambiguous days like this, shorts, can be valid. However, I'll be taking longs on this backtest. And we get a first entry here. I'm looking for right, we get 20 points here. All right. So PD equals 90 plus 20. All right, let's see where this market goes. Oh wow, it stops you out. So it's good. This is a good case of where a 2-to-1 exit is more advantageous than a larger trade. So it's one of the reasons why I take 2-to-1s. All right. So this was my 12th. Right. All right, we're looking at the market and it looks bullish here. And we're printing higher highs and higher lows. So let's find an entry. All right, so we get an entry here. We're gonna take a 10-point stop. Point targets. All right, relatively easy. All right, so fairly simple, straightforward. Market's bullish, moving higher, printing higher highs, higher lows. We're looking for a pullback entry, but generally speaking, the entry is simply 2 successive green candles, 2 successive bull candles. So we get an entry here, and we go for that. And on occasions I do take higher than 2-to-1, but for the purposes of the back test, and what I typically take will be a 2-to-1 entry. So, yep, plus 20. So our points delta is going to be plus 20. All right. And onward we go. July 31st, 2024. Our next FOMC meeting is September 18th, 24. September 18th, 24. And this is a more of an ambiguous chart. However, I would be taking long simply because we do print higher highs here, and we're printing higher lows here. And this is where successive green candles occur right off the bat, and I'll take an entry here. Right, that did not work. That's fine. All right, so we'll take entry here. Stop loss is going to be 10 points. But okay, so we have two losses here. So that's minus 20. And we'll be done for the day. So our points delta equals 130 minus 20 equals 110. And let's see what the market does. So it's a tricky market. It's a very tricky market here. But it does look like shorts fulfill. This is where ambiguity can lead towards successful strategies on the opposite end of what's obvious to me, at least. But what's obvious to me is that we're printing higher highs and we're printing higher lows, so I take longs. All right, on to the next. The next FOMC meeting is November 7th, 2024. All right, November 7th happens to fall on a Thursday, so anyway. All right. Lots of ambiguity in the market, so no idea what to do. It's all within the range. So we might take longs. Let's see if longs work. right, and we have another opportunity to take longs here. So we'll try for that. All right, 3 o'clock. Okay, worked. All right, and yes, this is the correct date. I've checked a couple sources. So yeah, so November 7th, 2024 is FOMC, and we have a long here that fails, and then a long that wins. All right, so this is 15th. And our points delta is 110 plus 10. Our next date is going to be December 18th, 2024. December 18th. It's breaking down strongly. Okay. All right. Lower lows, lower highs. And we'll take shorts here. I'll keep a larger stop because the highs are here. But nothing larger than 11 points. So very, very tight range of stops. All right, sell. Okay. We'll just assume 20. We'll just call it 20. All right, so 120. 120 plus 20. All right. And with that, we'll increase the size just a little bit. Remember, the distance between 4 to 5 is very small. It's only 25% increase. So we're keeping it very low. The danger is when you increase it substantially. When you increase size substantially, when you go from 1 to 2 contracts or 10 to 20 contracts, they're very large moves. So yeah, so 4 to 5 as we're moving higher, there's a small incremental increase. So this is number 16. In our next is going to be January 29th, 2025. All right, one more year. January 29th, 2025 up to December 10th. All right, between 2 o'clock and 2:30, before the press conference, the market is bearish, printing lower lows and lower highs. Very obviously bearish. So we'll look for shorts here, and we get shorts over here. Here might be a case where I increase the size a little bit just to get there. So we're going to sell. And we get stopped out. All right. And we're going to keep that. We're going to keep that stop loss. All right. And all right, so minus 22 points. We'll just call it 20. So 140 minus 20 equals 120. All right, on to the next one. Okay, so this is 17. 20. The next one is March 19th, 2025. All right, I skipped past it, so we'll just have to go through it here. So this would be the 18th trade. March 19th. Market's printing higher highs, higher lows. And we get an entry off the bat here. 2 successive green candles. And we get 20 points off the bat. So our PD, our points delta, is equal to 120 plus 20 equals 140. All right, so we're back to 140 points. Okay. We'll move on from here. So March 19th, the next one's May 7th. Okay, the market is creating lower lows, lower highs, bearish movement. We're looking for a short side play. All right, we get our first entry here at 244. And we're going to sell. And we get our target filled here. So that gives us our PD equals 140 plus 20 equals 160. All right. And our next FOMC is June 18th. Okay, the market's printing lower lows and lower highs. We're looking for a short. We get position here. We're looking for a 10-point stop. And 2 to 1. We get our 2 red candles here. Let's see where this goes. All right, fairly easy. So PD equals 160 plus 20 is 180. All right. July 30th is the next one. This is a bit ambiguous, but we are printing, I guess off the bat, we're printing lower lows and lower highs. So it is a bit ambiguous to determine the direction, but I would take shorts on this simply because we have we have lower lows getting printed, but we also have lower highs being printed as well. These lower highs being printed give me evidence to take shorts. So I'll be taking shorts here. July 30th, yeah. So it's the today. Given 180, 200, so our so points delta goes 180 plus 20 is 200 points. All right. And we'll move on. This can be interpreted in both ways. We have a higher high being printed and a lower low being printed, and you know, we enter an ambiguous. We begin 2:30 the press conference in an ambiguous circumstance where the market hasn't moved very much from the internal range of the first 1 minute. All right, I personally am taking shorts on this move because I see that the market's moved a little bit short, but it is ambiguous. You can take the longs as well. So we'll take shorts and then we'll look back and see what how the longs did. So I'll take shorts here. and the shorts get filled. Shorts get filled. So our points delta equals 200 plus 20. 200 plus 20 equals 220. All right, and we'll look at see how the longs do as well. So longs looks like they're not doing too hot. We'll see. So we got one loss here. And then we have another entry here. Second loss. Yeah, so it did work out for me, but I only took the shorts because of just a very subjective sense where the shorts look, where the market looks more bearish than it looks bullish. However, at 220, I might I'll increase size again by just one contract. Simply because we're up about 60 points since the last time. 60, 70 points, 70 points since the last time we increased size. All right. Okay, 17th September, October 29th. All right. So this is what, 23? So 23, the market is very mildly bearish here from 2 to 230. So we see right. So from the reference candle here, we see that the market is printing lower highs and printing lower lows. So we're looking for a short side move, and our opportunity is at the end of these two consecutive candles. We take shorts here, 10 points. Looking for a 2 to 1. So points delta here would be 220 plus 20, 240. All right. This is my last, this is the most recent FOMC that we've had. Right, so 2 o'clock, 2:30. All right, the market is bullish, printing higher highs and higher lows. So we're just looking for an entry. So we have an entry off the bat here. Right. and it gets hit. So our points delta which is the running tally of points accumulated on a strategy. It's a very important indicator that I use for success in a strategy. Is 240 plus 20 equals 260. So there you have it, 260 points. We have 3 years of data, and it's a very, very simple strategy. It's the simplest strategy that I use in the market. And we'll see how this has accrued money over time. So we have a 62% win rate. $18 winners, 11 losers. Yep, there you have it. It's 29 trades. Yeah, 29 trades. Okay. I guess that's it. I don't really use FX replay that often. Yeah. All right.